next presentation, Payment Solutions for Modern Retail. May I please invite the CEO of Atom, Mr. Devang Nerala, to make the next presentation.
Good afternoon. I think you had a pretty good sessions in the morning in terms of going through right from logistics to a whole lot of different solutions around there. As an retailer, I think if you look at a life cycle across the last 3 days, we've been talking about retail, we've been talking about e-commerce and a whole lot of other things. One of the most important things when you look at a retailer or an e-commerce website, the holy grail is digital payment. If you don't sort your payments out, nothing else works out because it adds to your cost, it adds to everything personally, whatever you do in the overall chain. And at the end of it, what are you in business for? You're in business for making money, you're not in business for doing something else, right? So you need to ensure your payments are collected efficiently, your payments are made or collected from the consumers, you have efficient methods. But a lot of retailers will go around a lot of challenges in terms of how do we integrate, what do we do, what are the things. There are a whole lot of things and there are a lot of anguish which has created, a lot of apprehensions that are created about the payment service providers. So we are one of the payment service providers, been in the market for almost 8 years now, and we've been doing a whole lot of technology integrations right from multiple tools. So for example, we've been providing on IVR, on internet-based payment gateways, on point of sale, to going on to mobile, and now we're including trying to do more innovations like QR code-based payments and other things. But where does it leave you, for example, in that sense? And this is not a pitch for Atom per se, it's basically probably going to talk about what you're looking at from Mastercard, what is basically key issues which most of you would agree or would have faced in your lifetimes in terms of when you're creating a website for while doing integration with a payment service provider. Now, it's just getting the facts right. We're a country close to around a billion or 1.2 billion people. We have 20 plus million credit cards, 300 plus million debit cards in this country. Mobile payments have been introduced around 7 years back. We had a new payment channel, payment mode, which had come up. What is IMPS? That's Immediate Payment Service. This was introduced by NPCI. E-commerce over the last 3 years, over the last 6 years. Now, I don't say last 3 years because last 3 years has been a bad time technically for any commerce. But if you look at from 2006 onwards, e-com as a segment has grown up phenomenally. The attitudes have changed. People have changed out there in terms of understanding and adopting e-com. Of course, a whole lot of regulation has helped us in terms of RBI coming out with two-factor authentication for e-com. It has failed in case of an IVR because of the OTP, it has definitely failed, but for e-com, it's definitely succeeded giving confidence to customers as well as businesses. And industry is undergoing multiple changes, multiple touch points coming across. Today you're seeing, let's say, players coming out with mobile point of sale terminals. Tomorrow you'll see something else. For example, I was talking about QR code-based payments. So you'll have a lot more channels evolving to improve your consumer experience for payments. First and foremost, I think from a retailer, the whole thing starts with an idea of deciding what you want to do in your business. This is being. So one is because before you decide on your payment service provider, I think you need to be very clear in terms of what is your business all about. Are your customers going to be in India? Are your customers going to be out of India? Are they going to be global customers with geographies? Because I think fundamentally you need to understand most of the businesses are basically run to basically ensure their survivability and everything. But the moment we look from a risk point of view, there is a minefield out there when you look at international cards. The domestic cards and domestic payments have been secured, but international payments are not secure. I think that's a minefield out there, but you can do business. It's not that you should not be doing it, you should be doing, but with right caveats and things. Including in India, for example, you're doing in metro or across India, for example, I heard about, there's an article about Flipkart saying some time back, they would not do any delivery in maybe some area near Delhi, Ghaziabad or somewhere else, beyond maybe 10,000 rupees. Now that is essentially a demographic profile of the population which affects you. What sort of people are calling up? Are they capable of buying goods, not buying goods? People have money across the country, or people simply cheating you out there. Third, typically you'll be looking at, are you looking at only an internet-facing business? Typically, technically what happens is, every retailer says, I want to just set up a website. I don't want to do anything beyond a website. But that is not true because you have a call center, you have people who are going around and delivering goods. Maybe your cash on delivery models or part of delivery models, a whole lot of models are there in which you can innovate, including you could have a store. For example, firstcry.com, if you look at it, They started being a retailer and they set up a store right now. They're going and actually doing a franchisee model, they're doing a store model, they're going and selling stores, and they're using point of sale terminals, they're using Atom's point of sale terminals at the stores. So that's the difference where the commerce is merging, is converging clearly. So that's very important. Again, finally, what decides on the payment, because I'll tell you the rationale why this is important for payments. So the delivery model, whether you're doing your own logistics or is it outsourced. When you're doing your own logistics, you're technically looking at, you have a sense of comfort in terms of how you're going to make your payment, how you're going to collect your payment from your customers. Versus an outsourced model where you're dependent on the logistics provider. For all credit to all the logistics providers like Gatti, Delivery and Blue Dart and everybody else, but you are essentially dependent on them to give you efficiency in payments. Today, when you look at a Blue Dart or somebody else, you're getting a cash in 15 days time. I don't know anybody else who's getting money faster, but a lot of people are complaining that 15 days, anyway 15 to 22 days to get the money from any of the coding companies or any of the logistics partners, which is a kind of a challenge. It could be lower in a lot of cases, but it does help. Now, if you look at why is it relevant, all these points are relevant from a payments point of view. The whole thing we're going to talk about is efficiency of payment collections. Ultimately, our fight is against cash. As much cash as we move away from the overall system, is all the more healthier for us because that reduces the cost right from the government to everybody else. When you look at even from as a service provider, even as an e-commerce player, the cost of cash collection is surely a lot higher as versus anything else. So here we have, let's say, the overall channels out there. So when you look at overall technologies, why and what is the relevance of technologies out there, you have internet, IVR, point of sale, mobile charges. I think this is good enough for everybody to read. But this is essentially a landscape of technologies in terms of the front face, the form factor in which you are collecting payments. The technologies behind that could change. For example, you could have a mobile payment using a USSD operator or maybe a mobile point of sale dongle, which could be different. So essentially that is classified as a mobile payment thing versus basically a point of sale, which is your DPRS or a PSTN based. So internet, when you're looking at internet commerce, whether you're looking at a kiosk-based play or basically a pure internet website, B2C website for a consumer, because consumer can come on a website or a consumer can just walk into a kiosk and actually do a transaction. Let's say, for example, you've seen this kiosk at PVR or cinemas, where consumers actually can walk into the kiosk and actually take out the tickets out there. What stops them from buying tickets on basically the same kiosk? That's just one step forward. Same thing for IVR, because that's again through a call center thing where you're doing commerce. Technology, I think this again describes the various technologies where you've spoken about internet, your standard integration kits, security over the internet, your other solutions. IVR, you're talking about the multi-level support. The key requirements when you're looking at an IVR, no training required for usage. The mobile, again, mobile is a ubiquitous channel right now. A lot of people are moving toward mobile commerce, essentially looking at adopting the mobile or creating a B2C face to their own website or something else. You look at someone like a Flipkart, Snapdeal, everybody else has gone and created a website. Now that's something you need to decide whether you want to create a website, create a storefront or not on the mobile, or you want to tag on with something else. But that's a decision entirely left up to your business. But again, payments to that channel becomes very, very key. You need to have mobile-friendly pages. Because fundamentally what happens is a lot of people today, whoever is connecting to net banking, when you look at net banking on a mobile, the interface doesn't look up. You don't have mobile-friendly pages on net banking, except a couple of banks. We have State Bank of India which is providing a mobile-friendly page or a net banking channel. Maybe an HDFC Bank provides, but I'm not seeing too many banks providing mobile-friendly net banking. And that is one of the largest drivers of transactions. And some of the things we would recommend there is why don't you use maybe an IMPS as a mode for collecting payments if you're having a B2C mobile facing application. Because that's the easiest form of collecting payments. So I think another technologies play one of the first things, once you have created a website, another thing you'll be looking at signing up a payment service provider, and you say, okay, there are so many of them out there. Let's say on the internet there are close to around 10 or 12 leading, well, maybe 4 or 5 are leading players, other ones are a lot of fringe players available. So what is the key factors? This seems to be running across, sorry. So one of the key things which you're looking at, because I think you've already done your evaluations earlier, but some of the things what we would technically look at and recommend is you got to look for the age of the payment player, how long have they been in business. Because it's not about the key core technology capability or anything else. Including as a merchant aggregator, there is a certain amount of contagion risk which a payment service provider also carries. Tomorrow, if a merchant bunks up and folds up, the whole risk lies on the payment service provider. And if anything happens to the payment service provider, the entire risk, the whole thing, the whole contingent, everything rides down onto your business. You have to look at that sort of a factor. Product capabilities in terms of, there are lots more things that are happening right now, right from checkouts to basically looking at bin-based routing to load balancing to a lot of features which are being developed. E-commerce has evolved. If you look at, I don't know, if you start looking at comparatives in terms of what you need to be doing, you can do a whole lot of checkpoints in terms of what is going to be good for your customers. So if you say, given that Indian context, if you look at, for example, looking at the failure rates or success rates on the payment gateways, you also find is load balancing a necessary feature for us or not? Because that's clearly you're looking at a revenue maximization. Depending on your ticket size, if your ticket size is smaller, you may not look at a multi-bank EMI, but if your ticket size is larger, does the player provide me a multi-bank EMI option? How many banks are provided? There are 8 banks, 9 banks, 5 banks. What is the overall methodology of providing a multi-bank EMI? But that's the whole of question. That's where the product capabilities comes in. Third, of course, we're looking at the success rate because that's again a very, very critical factor because today your business is entirely dependent on basically the online space. It is no different from how a broker would operate a financial market or how a financial market operates. This is as important infrastructure. This is your business. This is your lifeline. If this collapses or if there's a payment collection problem, there is an issue in terms of customer experience. Customer will simply walk away. They're not able to do the payments on time. And umpteen number of times you've seen basically people walk away from the website if they since they're not able to pay. It's purely an experiential thing. Again, availability of horizontal offerings, that depends on entirely on your business case because if you're looking at your future vision in terms of going into from, let's say, internet to maybe something, the channel or something else, you would look at maybe a provider who will give you a single offering, a single screen, a single dashboard, because that essentially helps you in your settlements. So you don't want to end up talking to multiple providers, multiple banks, or multiple settlements happening out there. It becomes a key issue out there. You have to keep on your accounting staff out there to do your settlement. That is a big hassle. Final point is ease of integration, availability of shopping kits, because today you have right from Joomla, Magento, a whole lot of kits out there, and depending on what tools are you using to creating a website, maybe Shopify or some other, there are quite a lot of e-commerce platform providers there. So you can use any of the e-commerce platform providers is there in integration available with that, so that your time to market, and basically the cost of integration goes away. So that essentially helps you in trying to do that. And finally, of course, pricing is important. I'm not debating the question of concept of pricing, but is pricing maybe a 10 basis point or a 15 basis point going to make a fundamental difference to the way you do your business? So to kickstart your business first, ensure that your volumes ramp up, things ramp up, and then probably when you're really scaling up, you are really reaching a critical stage or inflection point, you're actually talking about pricing. That 5 basis point does make a difference. But when you're doing a business of maybe 10 lakhs or 20 lakhs a month, initially when a lot of small e-com sites start up, you're not going to make a difference on maybe a 10 basis point kind of a thing. That's hardly loose change. Second, I think a lot of people have been facing a challenge in terms of signing up with bank or getting a bank MID. People are talking about delays in terms of 3 weeks, 4 weeks, 5 weeks, 6 weeks. The payment service providers don't give you clarity. I've heard a lot of these questions on the internet and everywhere else. People come and say, oh, why don't I get my MID in time? Oops, again the turnout cost. Now, please understand some of the key things, because as your business is important to you, so is protecting the risk important for a basically service provider. Today, for example, we get umpteen number of calls from basically the regulatory authorities to basically cops to everybody else, depending on merchant frauds. We're not talking about consumer frauds out there. I'm saying 95 or 99% of businesses are real, but 1% of fraudsters are there in terms of frauding or defrauding customers. And when we do get that calls, the first thing they ask for is, are your KYC documents in place for the merchant? Now, that is where the key thing comes in, because ensuring your completeness of KYC documents is very key for ensuring that you're able to get your MIDs or bank sign-ups on time. Again, on a risk underwriting, you're looking at typically talking about providing the right kind of information, what sort of products you're offering, are the products, what ticket size of the products, the overall thing in terms of the overall product demographics, the product sizing, and everything is provided or not, so that appropriate risk call can be taken, appropriate underwriting can be taken by the provider. And finally, you're looking at displaying the refund policy, shopping policy, and terms and conditions on the website, because a lot of websites, when you're starting integration, they don't have these things in place. But just about the time the business is about to go live, you still not put that in place. And that is where the chaos comes in. Because without that, a bank would not give you basically a MID. Or if you are a merchant payment service provider, would not be able to sign you up. Because if you don't have these things in place, tomorrow if there's a risk, customers don't know where to go to. Ideally, there has to be a number because there are certain keys, do's and don'ts on the website that need to be there in terms of having that support number where the customer can call up, having the refund policy clearly stated out there, having the shipping policy, because there have been cases we have seen customers talking about maybe 10 days or 15 days for delivery out there and they're not stuck to the delivery confirmations. And that is where, that's a risk coming on the merchant itself. Settlement process, I think that's fairly key to known to everybody, but some of the key factors you need to understand here is understand the RBI regulations. Because the central banker comes out with regulations in terms of making the process a lot more simpler, a lot more easier for you. Earlier people were talking about 7 day, 10 day settlement, now that is not the case. We are technically talking about settlements in T+2. Which makes it easier for basically everybody to make a payment that's under the RBI supervised thing. So all payments go to a nodal bank account and everything else. So that becomes a lot easier for you when you're getting your payments from the service provider. Second mechanism when you're talking about is, are you open as a merchant for an escrow mechanism? This is not basically a sensitive, it's not an emotional topic because today when you're talking about an escrow mechanism, you're giving a sense of comfort to your customers, to a prime production website. For example, a customer will come and say, fine, yeah, if tomorrow, if the merchant folds up, my money is secure, I'm not going to have a risk in terms of, and yes, it does play with your cash flows and other things, but you need to understand the customer psyche also. For every 10 sites, there are going to be 2 bad sites out there who are just taking the customer's money and they're just holding up and running away. And we've known, I'm not going to talk about examples, practically every payment service provider has got hit by at least 1 or 2 such characters in 1 year. And it's not basically unknown, it's all over there. So that's one thing that becomes very key in terms of protecting your interests. We've had people initially resisting in terms of saying, oh, I don't want to get into an escrow mechanism because why are you sitting on my money? But at the end of the day, realize that if I'm able to give, but just by putting that, okay, your money is secure, the customer is getting far more comfort of coming on the side. And second, of course, the key element is going to be refund processing because how fast, if the customer has asked for a refund, how fast can you get the money back into a customer's account? That becomes very key, and it entirely depends on the banks behind it. On a credit card or a debit card, it becomes a lot easier because you're essentially dealing with the issuing bank and other things. It's a lot easier to manage that, but on net banking, it is essentially dependent on the bank account or the specific banks. The process differs, so there are challenges which a payment aggregator or payment service provider also will be facing. At the same time, basically from your side, there's the information, right now, information has to be given down to the consumer in terms of the tax for basically refund processing. Now brings to the risk and fraud management. We're always talking about key risks because people always, when they look at the overall risk, they look at risk primarily from a financial risk point of view. You have to look at risk not only from a financial, because financial is just one side of the whole thing. There's a whole lot of reputational element associated with that. Tomorrow, if the financial risk goes up, you cannot come back into business. Second is in terms of the legal risk because tomorrow, India is getting a highly aware society right now. A consumer, if you are not delivering on time, if there is slight inferior goods or whatever, consumer can go right from criminal to basically civil to any kind of court to consumer forums to every year, a complaint, file a case. I think that's a legal practice will become very, very key in terms of understanding the legal risk also. And be prepared for handling that legal risk because if you're not handling that legal risk, that becomes again a challenge out there. But coming back to the financial risk, again having one of the key things is core understanding of chargebacks. Why a customer would do a chargeback? On a domestic, everybody knows, again, I think a lot of people training the trainers out here, but if you look at domestic, the key to chargebacks is only service delivery. Consumer fraud is purely negated because consumer is responsible for putting in the V-by-V passwords and other things. But if there is a service fraud, how do you deal with the service fraud? Do you have the adequate documentation available with you in terms of right from delivery to delivering the goods? If it's basically e-com delivery or in terms of soft delivery, I would say in terms of software or other things, you have the right kind of proof and other things available to you or not. That is essentially going to help in terms of processing the chargebacks. Second thing is in terms of the speed of processing, because how fast you can provide that information. Today, a lot of banks give the chargeback windows from maybe 10 days to going up to 45 days. The Visa and Master gives a bank a 45-day window, but to a service provider, a bank gives only a 10-day window. They don't give anything beyond a 10 days. After that, the chargeback has to be accepted. So unless you have a risk piling up on your case. So as early as you can process it, as early you can provide the information, that becomes far more critical in terms of doing this. And of course, after that, that's a normal process in terms of once they have the information available, then it's a normal chargeback handling. Third is finally dealing with fraud. We're not talking about domestic fraud. Fraud is more prevalent on point of sale versus on the internet. Internet is far less, especially in India, because of two-factor authentication, we don't have frauds coming up. It's almost gone down to 0.0001, I think, percentage in India in e-com. But on point of sale, you do have fraud availability. There could be a case where there could be fraud cards used, SKIM card used, something else on the point of sale terminals. Understanding those kind of psyche is very, very key, very, very important. Second thing is going to be an international card, because international cards pose their own challenges. You're leading retailers who've been faced with and frauded with internet frauds on international cards. Going up to maybe, when you look at the fraud to sales ratio out there, it goes up to as high as maybe 8 to 10%. Is it basically on the quality of the retailer? No, it is basically primarily because of the fraud cards which have been there. Clearly creating a geofence around that, creating IP, a whole lot of fraud mechanism in terms of understanding those cards behavior and signing up with a fraud solution become very, very key when you're looking at, especially when you're looking at international transactions. So I think the overall element, that's what I've been able to describe in terms of the short term. I don't think I have too much time right now, but the idea is to basically give an overall context in terms of what we need to be looking at from an e-com. I think opening up for questions right now. Please ask questions.
Devang, can you comment on the IMPS and the QR payment method? And can you also talk about the card on delivery vis-a-vis the cash on delivery, the penetration rate?
Okay. Coming back, I think I'll go the reverse, because that's the faster thing when you look at card on delivery versus cash on delivery. A lot of logistics providers are looking at card on delivery model actively right now. Some of the key challenges from a logistics provider is basically, since the delivery, for example, let's say you have a Blue Dart or Gati or somebody else, when they carry a point of sale device, they need to be configuring multiple, when they call it technically MIDs for individual merchants, because they would not be able to take payments because they are not C&F agents.
Sure.
So they are essentially invoicing on behalf of the customer like a Flipkart or a Snapdeal or somebody else directly. So they would need to configure multiple MIDs and go down there and do those transactions. That is where the challenges they would be facing. When you have your own logistics, that which is what I was talking about, your own logistics. Your own logistics gives you that flexibility of your people carrying maybe a GPS terminal to a mobile POS terminal going down and doing the transactions out there. And that makes it a lot easier. The prevalence is smaller right now, but over a period of time, we are very sure that that's going to grow up. Something, for example, I'm not talking about a classical MLM model, but there are a couple of customers like Avon and other people who have their home delivery kind of a thing, where they're saying, why don't you use maybe a mobile point of sale terminal or point of sale terminal to collect payments from the people, or let's say in Mofussil towns or other things, because people have debit cards, people may have credit cards, but a lot of people have debit cards, but they may not have cash at home, so it becomes a lot easier for them to collect making payments using a debit card out there. Coming back to basically things like an IMPS, again, IMPS is a recent innovation from NPCI. It's immediate payment service. The whole idea behind IMPS was basically we have an instant payment or faster payment mechanism across fund transfer mechanism. It started being a fund transfer mechanism over a mobile instrument as a mobile banking channel, and now it has moved on from that channel into basically other things, whereby instead of net banking, you could technically use let's say IMPS as a mode for collecting payments. It's opened up basically, for example, a lot of banks, you have a lot of cooperative banks which were not there essentially earlier in the net banking channel. Now they opened up for IMPS. So you have a lot more banks enabled and available on IMPS to collect the payments. So that is there right now. It is taking a slow turn. The biggest use case for that has been in remittance right now, where people are doing remittance from cash to account. So you walk into maybe any of the outlets where they're transferring money to somebody as a villager or immigrant or migrants. When they're transferring money, they use IMPS to transfer money. So I think that's a movement, slow movement is going to take on. Third, you asked about QR codes. That's a recent pilot we have been doing right now. So we're saying on a store, we are not talking about the internet right now, this is purely on a store where you're putting in QR codes on the goods and using a mobile phone, scanning basically a QR code and opening up a payment. Technically, all the information is captured on the QR code itself in terms of pricing and a whole lot of things. So it's a shopping cart comes out automatically because you're already on a checkout page on your phone. You go and key in your card details, and if your card is already stored to maybe an Atom checkout kind of a model, then just go and pay using the phone itself. So that essentially would basically, that's the new thing we're just trying out right now in a couple of stores.
Thank you.
Hi there. I had a couple of questions. First being that you as a solution, you provide authorized only and ship, charge and ship options. That's question number one.
That part of coming in, please.
Hello, can you hear me now?
Yeah.
Yeah. The first question is, you as a solution, do you provide authorized only and charge when ship option to retailers? And B, why in the Indian payment processing services we've not seen AVS at all? Could it reduce the number of chargebacks that a retailer has to deal with? Can it reduce fraud over the internet?
I think if you come back to the first is authorized, is basically that authorized and charge later is available in India. So it's not, we do offer that. We normally call it a pre-auth. It's a pre-authorization kind of model which you see in hotels typically. So that is available. On the AVS thing is, again, it's the issuer and the overall payment network kind of a requirement, because in India now currently, rather than AVS, we already have a V/B which is enabled, and that does provide a lot of security. So with V/B being there, you don't really need to go for an AVS. Because AVS came up in US because of a whole lot of consumers and all coming across. They don't have a V/B mechanism out there. AVS was used as a mechanism for curtailing fraud in US.
It's just not used. Once we have the validation done by the issuer bank, at least on the street address and the zip or the PIN code, it's easier for us as retailers to understand whether it's a shippable, deliverable address or not. Because it's again logistic cost or a third-party service. You understand where I'm coming
No, I agree. It's a very, very, very valid point out there. But I think that's not, they've not taken that into cognizance, and probably I think we can talk to the issuers and get their heads up on this also. Let me have a word with them. I think that's a good point. Thanks. Yeah. I think that ends it. Thank you very much.
A big round of applause for Mr. Nerala. I think payments are the backbone of